Thank you very much for that warm welcome. Hello, everyone. Good afternoon, and thank you for joining me on today's edition of NAHU's Compliance Corner. My name is Benjamin Davis, and I'm the Vice President of IRS and DOL Compliance at Diversified Administration. As you've heard, I've been involved with ACA reporting since it was first required back in 2015. I've also assisted companies responding to IRS letters 5699 and 226J since they were first sent out in 2017. This is what I do, and it's my sincere hope that after this webinar, if a client comes to you with one of these IRS penalty letters, you're able to advise them on how to properly respond and get their penalty eliminated in its entirety. So before we dive in, I wanted to quickly go over the agenda. We're going to take a look at what happens if you don't do your ACA filings and then ignore all of the letters the IRS sends. Then we'll look at the ways you should actually respond to the IRS letter 5699. Then we'll take a look at what happens if you try to do your own ACA reporting, or if you have a payroll company do it and end up getting an IRS letter 226J. And finally, we're going to look at what you can do if you want to avoid these IRS letters altogether. So we're going to begin by talking about what happens if you don't prepare your 1094-C and 1095-Cs, and then you ignore every letter the IRS sends you, or as I call it, the ostrich strategy. Much better. Now, for anyone who's attended any of my presentations before, you'll know that I do leverage the fact that I originally went to school to study graphic design back in the day. That certainly helps keep an hour-long presentation on the Affordable Care Act and ACA compliance interesting all the way through. So I want to talk about what I call the ostrich strategy. If I asked you to tell me something about an ostrich, one of the first things you'd say is they put their head in the sand when they're afraid. The ostrich basically thinks, if I can't see it, it's not there. They hope that if they ignore a problem, it's going to go away. Using the ostrich strategy with an IRS penalty letter is an incredibly bad idea, but we can really learn a lot about what happens from someone who chooses that option. So we're going to look at that first, and then we'll learn how to respond to these letters properly. Now, as far as people you don't want on your bad side, the IRS is pretty close to the top of that list. They don't care who you are. They're going to get what they're after. Martha Stewart and Wesley Snipes can both attest to that. Now, suppose there was a company, let's call it All Muscle and No Brains Gym, and they're like, ACA reporting, you know what? Hard pass. That's just not my thing. ACA reporting, I'm not feeling it, bro. So if you don't mind, I'm going to get back to working on my abs. So what would happen if that really was a company's attitude? Well, nothing would happen for about 2 years, but then he would have some serious abs. He would also have some serious problems with the IRS though, because that's when he opens his mail and finds an IRS letter 5699. Now, this letter 5699 is basically the IRS saying, it looks like you should have done your ACA reporting, but we haven't received it. The second page of the letter says that within the next 30 days, you need to return the form with one of the following options selected. I already filed. My filing is attached. I'll be submitting my filing within the next 90 days. I wasn't an applicable large employer, and therefore I didn't need to file. And there's a space for other. So which one did All Muscle and No Brains Gym choose? I told you, hard pass, man. An IRS letter is definitely not my thing. That's how we roll here. Now, if you don't mind, I'm going back to work on my abs. Well, unfortunately, the IRS does mind. About 2 months later, they sent out a letter 5698, which basically says, we sent you a letter 5699 and never heard back. We've attached it again for your convenience. Please respond. Similar to the letter 5699, this letter also gives a 30-day deadline. You know how much more buff I can get in 30 days? Well, I'm going to find out, because that's what I'm going to be doing. Definitely not responding to that IRS letter. Told you, bro, hard pass. That's not my thing. Well, after one particularly grueling workout session, he finds another letter from the IRS. This one's actually a pair of documents, an IRS letter 5005A and an IRS form 886A. The IRS letter 5005A indicates that the penalties are being proposed. Depending on which combination of boxes are checked, the penalty may relate to a failure to file forms with the IRS, and this can be either the B forms or the C series forms, depending on whether the company is self-funded, level funded, or fully insured. It is also possible that the penalty relates to a failure to distribute the forms or a failure to furnish the forms to the employees. I should also note it is possible, as is the case here, that there could be a penalty for both the failure to file and a failure to furnish. They do come in separate letters. So this is the IRS Form 886A. This is what they call an explanation of items. It basically says, we think All Muscle and No Brains Gym needed to do their ACA reporting. We never got any, and they never responded to either of the letters we sent asking why nothing was filed. As such, we're proposing the following penalties. Since we didn't hear from them, we had to go by the number of W-2s they filed with the IRS, which was 132 in this case. Based on that, we're charging them roughly 70 grand, half for failure to file and half for failure to furnish. It's also interesting to note the way they end that letter. If you agree with the penalty, you can pay it. If you don't, quote, you'll have the opportunity to appeal the penalties after we send you a formal request for payment, end quote. So other than cutting them a check, there really isn't an opportunity to respond to this particular IRS letter. Good, because you know what I was about to say. Yeah, we know something about abs. And of course, a short while later, he opens his mail to find a much different looking communication. You'll notice there's no greeting here. That's because this is not a letter that the IRS is sending. It's a notice. And this notice, which is the IRS Notice 972CG, basically says, you didn't do your Obamacare filings. You haven't responded to any of our letters, and therefore you've been assessed a penalty. They are nice enough to note, however, that interest won't start being charged until you've actually received a bill. The IRS gives you two options to respond to this notice 972CG. You can either consent to the full amount proposed and include payment along with the response, or you can say, I disagree with part or all of the proposed penalty, and I've included my explanation why. If you agree with part of the payment, you do have the option to include that along with the rest of your response. The IRS gives you 45 days to respond to this notice, 60 if you live outside of the US. The notice explains that if you don't respond, you'll get a bill called a Notice of Penalty Charge, and interest will begin being charged at that time. They will also explain how they calculate the penalty amount. Those variables can include how many forms were late, how late those forms were, and whether or not they were distributed to the employees. Similarly, doing what this example company is doing would qualify as intentional disregard, meaning there would be no cap on the penalty amount. So if I haven't stressed how bad of an idea it is yet, do not use the ostrich strategy. Advise all of your clients against using the ostrich strategy. Do not ignore letters from the IRS. Now, this notice gives three options to respond. I agree with the whole penalty, I agree with part of the penalty, or I disagree with the penalty in its entirety. A signed statement and supporting documentation are required when selecting the second and third options. So if you're not paying the penalty in its entirety, then you're required to include documentation. I heard you rambling on about proposed penalties. If I wanted a proposal, I'd have gotten married. Hard pass. Not my thing, bro. Bachelorhood for life. Enough of this IRS talk, too. I'm going back to work on my abs. Like I told you, bro, priorities. Really? We both think you should just respond to these letters already. Told you, man. Hard pass. Well, unsurprisingly, the IRS sent another follow-up shortly thereafter in the form of an IRS notice CP-215. This is one seriously unpleasant notice too. No longer is there any talk of a proposed penalty. No, this is a bill. This is the IRS saying in bold, size 16 font, we charged you a penalty. This is a penalty for failure to file the forms with the IRS. And this is a separate letter, which is a failure to distribute the forms to the employees. It looks like this letter was sent out a few days after the first, and in that time, $33 of interest has already been tacked onto their bill. This notice does provide the opportunity to respond with any documentation you think may be useful in getting your penalty reduced or eliminated. And of course, it also gives you the option to respond by making a full or partial payment to the IRS of the amount that you now owe them. Because again, this is not a proposed penalty. This is a penalty. This is a bill, and you now owe the IRS this much money. Wow, that sounds bad, bro. I'm glad I threw mine away without reading it. That definitely isn't my thing. But you're starting to harsh my mellow. Anyways, I'm going back to work on these abs. I'll do me and you do you. Well, unfortunately, the IRS is going to do the IRS, which means they're going to be sending out a notice 504B. And I apologize that this is actually a sample letter. The client I was helping through this hadn't thought that this particular letter was important enough to keep, but it basically says you haven't paid what you owe us. If you don't pay, or if you don't make arrangements to pay within 30 days, we're going to start seizing your property. The 504B also says that if you don't pay up, they can levy your property or the rights to your property. This includes account receivables and other income, bank accounts, and other business assets. They may also revoke your passport or prohibit the State Department from issuing or renewing your passport. They can also file a lien, which can make it difficult to sell or borrow against your property. It will appear on your credit reporting and can cause other headaches and hardships. They, quote unquote, are required by law to charge you interest, and they happily comply with that law. Finally, they do give you the right to appeal the levy under the Collections Appeal Program within 30 days of the receipt of this letter. And you are going to respond, aren't you? No, no, I'm not. I've got to take my ostrich strategy literally. Maybe then the IRS will finally go away and leave me alone. What do you mean I've got mail? Let me see. What is this IRS notice LT11? Well, this notice LT11, by the time it was sent out, the interests went from around $30 to $1,530. And that's probably the least scary thing about this notice. This notice is the IRS saying, we haven't received a payment despite sending you several notices. We're about to start seizing your property, including wages and other income, bank accounts, business assets, personal assets, including your car and income, Social Security benefits, and more. If you don't pay or make arrangements to pay, we can file a notice of federal tax lien if we haven't done so already. Oh, and even if you do request a hearing at this point, we can still file a lien. The State Department won't issue you a passport, and if you do have one, you're not eligible for renewal, and it can also be revoked. We told you so. Okay, say I want to respond to that original IRS letter 5699 I got way back when. Can I still do that? Well, actually, yes, you can. Martha Stewart and Wesley Snipes can both speak to how nasty the IRS can get when it wants, but this 4980H response unit, the one responsible for compliance with the ACA obligations, is much more like Google. If you want to make us think about it, sure, they're happy to take your money, but what they really want is the data. And once you give that to them, they don't really want anything else to do with you. And since this is still the IRS we're talking about here, that's exactly what you want, for them not to want anything from you. So let's take a look at this IRS letter 5699 one more time and see just what our options are as far as how to respond to it. So the IRS is saying, it looks like you might have had over 50 full-time equivalent employees last year, which means you would have had to do your ACA filings this year. We didn't get them, so we wanted to reach out and see what's up. Well, we're not going to go into more depth about calculating full-time and full-time equivalent employees here, but I will say that once you've done these calculations, the magic number is 50. Employers who have averaged less than 50 full-time equivalent employees the prior year don't count as an ALE the current year and aren't subject to the employer shared responsibility provisions or the employer information reporting provisions of that current year. Only companies who average 50 or more FTEs that prior year are classified as an applicable large employer and subject to these ACA provisions. I just ran the reports, bro. I had less than 50 FTEs that prior year. Really? So you were not an applicable large employer. Well, then let me work my magic and make this penalty disappear. Now, the way we're going to respond to your IRS letter 5699 here is we're going to check that box saying that you were not an ALE. I'm also going to include those reports that you ran. So we indicated that this client was not an ALE, sent the documentation out, and then just a short while later, I'm pleased to say that even this late in the game, after ignoring all of the letters from the IRS, I was able to secure them an IRS letter 168C. This is the IRS saying, with the information you've provided, we're able to remove that $70,000 penalty. If you have any questions, let us know. Oh, and you may want to keep a copy of this for your records. So, as bad as things looked, I was still able to give this story a happy ending. Before we move on though, I want to say that before ignoring all of the IRS letters, that company did respond to the first one, to that original IRS letter 5699. And this is an actual screenshot of what they wrote the IRS. We didn't prepare our 1094 and 1095s because we didn't offer health insurance. And of course, the IRS responded in a letter 6145, basically saying, okay, you still need to file. So while ignoring the IRS letters are obviously bad, this isn't exactly the type of response I would recommend either. Do not try to respond to these by yourself. Now let's go ahead and look at some of the other ways to appropriately respond to this letter 5699, aside from saying I was not required to file because I was not an ALE. Another company that got an IRS letter 5699 actually had done their filings. However, the payroll company hired to prepare them didn't use the correct name or EIN when it was filed. When this happens, the IRS will actually respond with what's called a TIN mismatch error. That'll indicate that the filing needs to be resubmitted. Unfortunately, the payroll company ignored that IRS error. This means that later on, when the IRS goes to check their records and say, hey, which companies filed their forms, they couldn't find anything for this particular client. That failure to find those filings prompted the IRS to send them this letter 5699. So this was an instance we were able to respond by checking that first box and saying, these forms were filed back in September of 2019 with this company name and this EIN. And then we check the box at the bottom, providing them the correct company name and EIN. In addition to saying, I didn't need to file and I already filed, The two other options are actually the most common. Typically, when the IRS sends a letter 5699, it's because it's sent to a company that was required to do their filings that failed to do so. For those companies that needed to file but didn't, they've got two options. Indicate that they'll be filing within the next 90 days, or indicate that they've included the paper forms with the IRS letter 5699 response. Now, that option is only available for companies with fewer than 250 employees, as companies with more than that are required to file electronically. If any of your clients fall into this category, they'll need to prepare their 1094 and 1095s to make this issue go away. And while I'm not allowed to recommend here that you use diversified administration to take care of this, I will certainly advise you not to have your clients prepare the filings themselves, and also advise against having their payroll companies do it. Now, I'm not one to knock payroll companies. I mean, we use one at my company, but we use them for payroll. And when payroll companies, or any company really, start saying, oh, well, we also do this and we also do that, it really starts to remind me of those 3-in-1 shampoos we all walk right past in the supermarket. We know at some point you need to ask, are you really doing all of those things that well? So you don't have to use diversified administration, but whoever you use a professional. Don't have your clients do it themselves, and don't advise them to use 3-in-1 shampoo. Because if they do, they might get an IRS letter 226J. While the IRS letter 5699s were concerned with filings that weren't done, the IRS letter 226J is concerned with problems in filings that were done. First, we're going to look at what's in the letter 226J. Then we'll look at what prompts the IRS to send them out. And finally, we'll look at the various ways to respond to them. I'll begin by noting that the 226J letters are significantly scarier than the IRS letter 5699, as you'll see. Now, here, the penalty is highlighted in bold immediately after the first sentence. You owe us tens, or more likely, hundreds of thousands of dollars. The IRS explains that it's because you either didn't offer ACA compliant coverage, or that the coverage you offered wasn't affordable. The first page also notes that you've only got 30 days to respond. If you agree, the IRS says you can just go ahead and complete the form 14764 and enclose your $315,000. They note that you can also pay them electronically. They also note that if you choose this option and then don't pay, they're going to begin their collections process. They also tell you what to do if you disagree. We're going to go ahead and look at this in a lot more detail shortly, but for now, we'll continue to see what else is in the contents of this IRS letter 226J. The next thing you find is an ESRP summary table. This shows how the IRS calculated the total amounts of their penalties. Companies which entered no in column A may be subject to both the 4980HA penalty as well as the B penalty, as you can see from this example here. Between those two penalties, this company was charged $26,000 a month, or $315,000 for that year. The next thing that's included in that letter is an IRS form 14764. You can complete this form and say, yes, I consent to pay that $315,000 assessment in its entirety. There's also a box to indicate that you disagree with part or all of the proposed penalty. You also have to indicate which payment option you choose, even if that option is no payment. Finally, you'll find the IRS form 14765. This form indicates which month the listed employees are generating penalties for. Now, counterintuitively, the shaded or highlighted months are the ones not generating the penalty. It's the unhighlighted months which are generating the penalty, and those are the ones which need to be addressed. You'll also notice that there's a blank second row. This is where the correct codes should be entered. And finally, there's a space all the way to the right where you can indicate whether or not there's any additional information attached. The most common reason a company gets one of these letters proposing a penalty for not offering coverage or for not offering affordable coverage most often doesn't have anything to do with either one of those. It relates solely to the fact that the company tried to do the ACA reporting themselves or had a payroll company do it, or just somehow submitted incorrect information to the IRS. Now, anyone familiar with the codes on the form 14765 I have up now, or the one I had up 2 screens ago, is thinking to themselves, well, of course they got an IRS letter 226J. Look at what they submitted in their filings. And yes, having 1F/ or 1H/ is definitely going to prompt one of these letters. One company asked me to explain to them why they got a letter 226J. So I said, the form 1095 uses code combinations to tell the IRS what happened for each employee for each month of the year. Very few of these combinations, when used together, make sense, let alone are permissible. Unfortunately, a lot of the ones that you included in your filing were, for lack of a better word, nonsensical. When you include these nonsensical combinations in your filing, the IRS is going to want to see what's going on. So for one employee, the code that was used was 1E/2D. In English, what you told the IRS was, we offered this employee affordable ACA compliant coverage, and the reason that we did not offer coverage to this employee is because they were in their waiting period. They weren't benefit eligible yet. So you can't both offer an employee coverage and say that you didn't offer them coverage because they're in their waiting period. That's nonsensical. Similarly, another employee had 1H/2D, which correctly indicates that they're in their waiting period, but this person had that code for 4 months. That indicates that person was in a waiting period longer than is permissible in the ACA. And one other employee had a code of 1H/2H. In essence, what you told the IRS here is, we didn't offer this employee coverage, and the employee waived the affordable coverage we offered them. Now, clearly, there's no way for an employee to waive coverage if no offer was made. So just like it's easy to make mistakes when communicating in a foreign language, it's easy to mess up unless you're fluent with these codes and can read them as easily as you can read the text on your screen. A second reason the IRS letter 226J can be sent out is because an employee who was offered affordable coverage went to the exchange to get coverage and received a premium tax credit. They essentially said, my employer didn't offer me affordable coverage, so I need one of those few $1,000 handouts I hear you got going on. So these forms say any month that shows XF, XG, or XH means we don't think you qualify for that affordability safe harbor provision. Now, the last reason a company might get one of these 226J letters is because they legitimately didn't offer compliant coverage or that the coverage was not affordable. Now, this was more common back in 2015, 16, and 17 when this was all still relatively new. But now that we've been doing this the better part of a decade, most companies are actually offering affordable ACA compliant coverage. Now, I know you're going to hate me for even asking, but hypothetically, what happens if I got an IRS letter 226J and I'm just like, hard pass, bro, not my thing, got to go work on some abs? Well, I'm glad you asked. You're going to get an IRS letter 5040J. This is a follow-up to the 226J. It says, we didn't hear from you, and you've got 15 days to respond. And if we don't hear from you, the proposed penalty becomes an actual penalty. That was just a hypothetical. How do I respond? Well, you prepare a complete IRS 226J response package. What's required there is you have to take a look at each employee on that list and see what actually happened to them for that month, then report to the IRS using the correct codes in the space available on that second line. Now, it turns out, fortunately, that most of these people were made a qualifying offer, which means the offer was affordable even to people whose wages are that equal to the federal poverty level. This is indicated by the 1A/2G code combination. You'll also notice that one of the employees has 1H/2B listed. This indicates that that employee was working on a part-time basis and therefore not benefit eligible. Finally, you'll see that most of the boxes to the right are checked, indicating that additional documentation has been attached. Having employee waiver forms, termination forms, election or new hire forms can really help an employer's case when responding to an IRS Letter 226J, especially when an employee has gone to the exchange saying they weren't offered affordable coverage. Without a waiver form, it's basically a he said, she said situation. He said, she said. You're still allowed to say that in 2021, right? Anyways, having a waiver means it's no longer a he said, she said situation. You've got a signed document attesting to the fact that they waived the affordable coverage that was offered. So you want to go ahead and include that whenever possible in your response package. So we've completed the 14764, indicating that we reject the penalty. We've completed the 14765, giving the IRS the correct codes for the employees in question. We include whatever substantiating documentation is available, along with a cover letter explaining to the IRS what's included in the response package. We always advise that a client keeps one of those copies on file for their records, and the other should be sent to the IRS. We do recommend they send it delivery confirmation. However, we advise them not to send it signature required. There have been instances where the IRS refused to sign and then the package was returned to sender. With a 30-day response window, that's a lot of back and forth that there is no time for. So definitely do send it delivery confirmation, do not send it signature required. So well, now let's take a look at all of the steps in the conversation. We'll kind of take a look back and see what this whole conversation is. So the IRS sends a 226J with that ESRP summary table calculating the fine. They assess the penalty or the proposed penalty, and then provide information on how to respond. We've just gone ahead, helped the employer complete that response package with the completed 14764 and 14765. In this instance, the employer disputed the ESRP penalty in its entirety. And the next step is the IRS will respond with a letter 227. There are 5 flavors or varieties of this 227 letter. And in those, the ESRP is either maintained, reduced, or hopefully eliminated in its entirety. Now, I should say that ever since the government shutdown a few years back, and I know there's another one like right on the horizon with this debt ceiling nonsense, but ever since then, they've been sending out an IRS letter 2645C. It basically says, we've received your response to our letter 226J. It then informs the recipient that the IRS will issue a formal response to that 226J in the form of a 227 letter within the next 60 days. So that really set them back, and I imagine that if there is another shutdown, that we can anticipate this letter continuing to go out possibly with an even longer delay than the 60 it currently mentions. Now, as I mentioned, there are 5 different 227 letters, J, K, L, M, and N. Each of them acknowledge the ALE's response to a letter 226J. The letter could indicate the penalty remains unchanged, that it's been reduced, or that it's been eliminated. So let's take a look at each of those letters, first beginning with J. So the IRS letter 227J is sent when the employer agreed with the ESRP and will pay the penalty. After the issuance of this letter, the case is closed and no response other than paying the penalty is required. The letter 227K acknowledges that the ESRP has been reduced to 0. After the issuance of this letter, the case is closed and no response is required. This is the letter 227 that you want if you're disputing the fine, the 227K. This is the one that says, hey, your penalty has been eliminated in its entirety. The 227L acknowledges receipt of the information provided, and it says the ESRP has been revised. The letter includes the updated PTC listing, the 14765, and the revised calculation table. At this point, the employer can either agree with the penalty or they can request a meeting with the manager or appeal with the IRS. Typically, the 227L is the response the IRS sends when a company prepares the 226J response by themselves. Often they are able to get part of the penalty removed, but part of the penalty is still there. So they may say, hey, you got $15,000 removed, great, please pay the remaining $300,000. So yeah, it's certainly better than nothing, but no, not what you want. You don't want the 227L. Now, the 227M acknowledges receipt of the information provided and says that the ESRP did not change. Now, it says they provide an updated Form 14765 and a revised calculation table, but it's not updated and there's no revisions. It's the same as the original 226J because the ESRP did not change. The ALE can agree with the proposed penalty or they can appeal the decision once again. You do not want this letter if you're disputing the ESRP penalty. If you do not appeal your penalty, or if you lose your appeal, you will receive an IRS notice CP 220J. That's the letter that actually assesses you the amount of the proposed penalty. And here's one from an unfortunate client that tried to address the 226J themselves and ended up getting an IRS notice CP 220J. This is when the proposed penalty officially became an actual penalty. This notice is the bill. There is one more IRS letter 227, and it's the 227N. For employers who appealed their ESRP with the IRS Appeal Board, the 227N informs them of the result of that appeal. It's final, and any remaining ESRP must be paid. If it's forgiven in its entirety, then there is no additional response required. Now, if you want to avoid the IRS letter 5699 and 226J altogether, I recommend having a professional prepare an employer's ACA reporting. Don't let them do it themselves, and don't let themselves wash with that 3-in-1 SpongeBob shampoo, conditioner, and body wash. Don't let them wait until the last minute either. 1095s need to be mailed to employees by the end of January and e-filed with the IRS at the end of March. So if you have clients that haven't started working on their 2021 filings yet, definitely make that a top priority. The easiest way to deal with these letters is not to get them in the first place. So do your filings on time and do them right, and that will prevent each of these from happening. And with that, I wanted to say thank you for attending today's edition of NAHU's Compliance Corner. I hope you enjoyed watching as much as I enjoyed presenting. And as a sign of my appreciation, I want to give everyone who made it this far a promo code to get 25% off your next service with Diversified Administration, NAHU 2021. And with that, I am happy to take any questions you have.